And gentlemen, good morning. Welcome to our Capstone Coffee conversation. Today is April 8th, 2024. I'm your host for the day, Brian Felshaw, and we're in Silverdale, Washington right now, and joined by a special guest, Eric Lowell of Bitwise Investments. We'll be asking him some questions about a very interesting and I think is very fun topic about cryptocurrencies and Bitcoin today. I've been looking forward to this one. Eric's been a great resource for us, getting to know him about the last 6 to 12 months, I'd say, and kind of being a resource for all things cryptocurrency related and translating that over to recommendations for clients. We appreciate your time, Eric. Thank you for joining us. You're out of Phoenix right now, is that correct?
I am coming to you live from my hotel room in Phoenix. Normally in the San Francisco Bay Area is where I reside and where I operate from, but down here for a conference this week. But either way, wherever I'm coming from, super thrilled to be on with you all this morning and excited for our conversation today.
Yeah, thank you. Thank you for joining. As usual, especially with this topic, it's a confusing topic. It's a deep ocean. If there's any questions at all, feel free to put those in the chat. We want to dedicate some time at the end to be able to answer any questions about that. Eric and I were just talking before we started here. There are no stupid questions in the world of crypto. It is a deep ocean, a tough topic, and so feel free to ask any questions at all. Hopefully, we can get some of the basics in and a good kind of foundation, so that if you have questions you want to speak with your advisors about, we can have a good productive conversation there. So Eric, let's go ahead and start with you just for a minute. Tell us a little bit about yourself, and Bitwise as a firm as well.
Yeah, no, thank you. As far as, personally, I've been in the what we call the asset management world for 25 years. A little bit different than what you do. In the asset management world and working for an asset management company, we specialize in working with wealth management firms. We don't work with the end client necessarily, other than doing things like we're doing today, which is more of just an educational conversation. But more or less, we work with wealth management firms and financial advisors and just trying to create awareness and educate them as well in the world of cryptocurrency and digital assets and how those can and where and how those can fit into investment portfolios. Bitwise is based in San Francisco, started in 2017, and we are what we call a crypto native asset manager, which means we create and manage investment vehicles, investment solutions that are all 100% based in the world of crypto and digital assets. And we provide these solutions in a number of different vehicles and wrappers. What we are trying to do is bring the world of crypto to the wealth management world and allow wealth managers like yourself, Brian, to have different ways, if they choose to invest on clients' behalf, have different ways to do it. Because not every client, as you know, not every client's the same, right? Every client is different. Every client has different tax situations, wealth situations. So we're just trying to bring different vehicles and provide solutions so that it does become available and easily available and scalable to wealth management firms out there. So that's a little bit about Bitwise. We are what we somewhat consider a boutique asset manager. We manage today about 3.8 billion in assets, which might seem like a ton of money in the asset management world. It's what we consider to be more of a boutique nature. But again, we're also working in what we call an emerging asset class, and more adoption is being created every day amongst the wealth management world as far as wealth managers and investment advisors investing on behalf of clients. So that number will continue to grow, but I would say we're still in the early innings as far as crypto investing, as far as the general public. So anyway, I hope that gives you kind of a good background or a little bit of background without being too long-winded.
Yeah, that's very helpful. Thank you. Thank you. Well, let's start right there. You mentioned this is still in the early innings. It's still an emerging asset class. Let's just start from the top of what is a cryptocurrency and what is Bitcoin specifically?
Yeah, no, great question. And cryptocurrency is an interesting term because I think one of the things that the world of crypto hasn't done a great job of is we use a jargon and a vocabulary that's not super easy to understand. And I'll expand upon this when I talk about what Bitcoin is, and where I'm going with this is I think in the world of crypto, sometimes we use multiple terms. We say cryptocurrency, we say digital asset, we say digital currency, and we use these different terms interchangeably, and they all mean the same thing. But in my mind, sometimes they don't accurately describe what it is we're talking about. But cryptocurrency and Bitcoin in particular were really meant to bring money into the internet world. And it's interesting, I say we're in the infancy stage of cryptocurrencies, but believe it or not, Bitcoin has actually been around since 2008. And, Bitcoin dominates the headlines today, especially in the financial news markets. You're constantly hearing about Bitcoin now on CNBC or Bloomberg News. And I think the first thing that people see is, oh my gosh, one Bitcoin, a coin that doesn't exist in tangible form, it's a digital currency, it's a digital asset, is $70,000 in American dollars in price. And what's interesting is Bitcoin is actually a very simple thing to understand. It's just sometimes you have to peel the layers back to really understand what it is. But when Bitcoin was created in 2008, it was actually created based on a white paper that was put out by somebody or something called Satoshi Nakamoto. We don't know if Satoshi was actually a human being. We don't know if it was a man or a woman or a group of people or a program. But this white paper spelled out what they wanted Bitcoin to be. And Bitcoin was literally designed, and the title of the white paper is a peer-to-peer payment, cashless payment system, essentially. I'm paraphrasing. It was meant to be able to move money from one person to the next. And what's interesting about it is it's done through what's called an entirely decentralized network, which what that means is a centralized network means that there's a governing body or somebody overseeing something that's done. A perfect example of a centralized network would be a bank. And if I wanted to, Brian, wire you $100 million, and if I was sitting in San Francisco, and let's say you were sitting in London, so a different country, and I wanted you to wire you a significant amount of US dollars, and let's say $100 million, and I wanted to do that on a Friday afternoon, I could go to my bank and I could go to them on a Friday afternoon and say, hey, I want to wire my friend Brian $100 million. He's over in London. Wires take place during business hours in the US. So if I came in on a Friday afternoon, it probably wouldn't happen until the following week. And it might take 1 or 2 business days, sometimes 3 business days for that to occur. And my bank may charge me about a 1 to 2% fee to do that. With the Bitcoin blockchain ledger, I can actually take that same $100 million and buy Bitcoin and send that to you. And that transaction could take place 24 hours a day, 7 days a week, 365 days a year. And it would actually settle in 10 minutes or less for probably no more than a cup of coffee for $5. So pretty interesting when you think about the ability to move money between individuals in a decentralized fashion where there's nobody overseeing that except the people who are running the blockchain to authenticate the transactions that are being done are valid. And it can do it in an incredibly fast rate. Now, what's interesting is you might sit back and say, well, why is that necessary? Like, okay, if you want to wire me $100 million, that's fine. It's fine if it takes 3 business days, not a big deal, right? And what's interesting though is a lot of us, I'm assuming most of us on the call are based here in the US, and we don't have issues with moving money. We can do it via Venmo, we can do it via PayPal, we can do it for wire transfers via bank. But where Bitcoin, believe it or not, has some substantial usage is in third world countries, things like El Salvador, Venezuela, sub-Saharan African countries, where those populations not only are underbanked, but they have easily manipulated currencies and hyperinflation. So Bitcoin has become a great way for them, for those citizens, to put money into something where their currency can't be manipulated, and give them the ability to move money between individuals in that country or from one country to another country where rules are a little bit stricter for people to move money. So again, Kind of a long-winded answer, and it's, in 20 minutes, it's sometimes tough to kind of perfectly describe Bitcoin, but hopefully that gives kind of an explanation. It was literally designed to be a way to move money between individuals at an incredibly fast rate in a decentralized fashion.
No, that's very, very important to understand. And I think actually you're right. We kind of in the US we kind of think of our own bubble and think that applies everywhere, but it does absolutely solve a lot of those international issues. Correct me if I'm wrong, but I think one of the applications I've heard of is some international companies using Bitcoin to help with payroll to get that done faster. If they have to pay somebody, company in Japan has to pay somebody in, El Salvador, or I don't know, wherever, right?
Yep.
And transfer money via Bitcoin faster and cheaper.
Yep.
So, I think there's a number of things we can dive into on there. I want to touch on, you mentioned the blockchain and the decentralization of that. I think that's important to understand. Can you talk a little bit about that?
Yeah, that's a tough one. You can go down a rabbit hole pretty quickly on this one, but I'll do my absolute best. But blockchain technology, in simplest terms, can sound incredibly confusing, but it's literally nothing more than a software program. And what's interesting about the Bitcoin blockchain, and again, it's just a ledger, it's a digital ledger. So think of bank ledger, everyone probably knows what some type of ledger is. What's interesting about the Bitcoin blockchain ledger is although it exists digitally, because it's technically a software program, every single one of us on this call can view it. You can literally go to your Google search engine on your laptop or your computer and search up Bitcoin blockchain ledger. And there's numerous sites that you can go to, and you can actually see not only every single transaction that's being done right then and there, the blockchain ledger is immutable. You can actually go back to the very, very, very first transaction back in 2008 that was conducted on the Bitcoin blockchain ledger. It was called the Genesis transaction. It was the very first one. I don't think anyone on this call probably has time or energy to go back and do it, but that's what's interesting about a decentralized ledger. A lot of times people think, oh my gosh, if there's no overseeing governing body, whether that be a government or a company that's controlling what's being done, how can it be safe? Well, it's safe for multiple reasons. We can't go into every single one today. It would take too much time, but just know what's interesting is because it's an open source network, meaning any single one of us on this call could go actually view the ledger and see what's being done. It actually creates a level of safety. And again, we could probably spend an hour just on this one question alone. So I'm trying to do my best to kind of keep it high level and conceptual to make it understandable. But the blockchain is literally nothing more than a software program. It just happens to be that in this particular instance for the Bitcoin blockchain ledger, the software was created back in 2008. It's via code and it's unchangeable. So anyway, hopefully that helps a little bit.
Yeah, I'll give the analogy I heard is if a hacker wants to, mess with the system a little bit, instead of just having to fool one central computer, they have to fool thousands of computers at once,
That's
and
exactly
that's
right.
a harder task to do. So let's let's move to some investment related questions on this because I think that's on a lot of folks' minds as well. I'm
Yeah.
looking at a chart of Bitcoin right now from the last 12 months, up 156% in the last 12 months, bumping close to its all-time high you mentioned of about $71,000 and change. Two questions for you. Why is Bitcoin price so volatile? Why does it change so much? And number two, tell us a little bit about what's going on with these Bitcoin ETFs, these Bitcoin
Sure.
funds.
Sure. I'll add on one other thing too there. I'll answer your two questions, Brian, but I think one other thing I'll throw in too, because I think this helps kind of people understand why there is a price to Bitcoin. Why does it actually have a price that moves up and down when it's this intangible thing, essentially? And I think one thing I'll point out before I answer Brian's questions is interesting to know that Bitcoins themselves don't just randomly get created out of thin air. Bitcoins are what are called mined. And what mining is, and I won't go down this road, this could be another half-hour conversation. But Bitcoin mining is what allows Bitcoins to come to fruition. And mining is nothing more than people who are operating on the blockchain that are validating these transactions that are being done for authenticity. And when a miner validates a certain amount of transactions, their reward, their fee for service essentially is they receive Bitcoin. And what's interesting is although Bitcoin just doesn't come out of thin air, it's created via validating transactions being done on the Bitcoin blockchain ledger. There will only ever be 21 million Bitcoins in existence. Today, there's a little over 19.5 million that have been created since 2008. What's interesting is 21 million will only ever be in existence, but that 21 millionth Bitcoin won't be mined or won't come to fruition until the year 2140. Not 2040, but 2140. So another 120 years from now is when the final Bitcoin will be around. But why that's important is Bitcoin is a scarce item. So when we think about basic economics and supply and demand, a lot of Bitcoin's price is just determined by supply and demand. If there's more demand than supply, the price goes up. If there's more supply than demand, the price goes down. So that's one thing to point out is that it's got scarcity to it. And that's why you see price involved. Why it continues to be volatile, where you can see years like this year where it's up, I think 60, 70% year to date since the beginning of January. But we know there's been years where it's down 60%, right? Doesn't happen, but you do see corrections every now and again in the range of 10%, sometimes 20%. And I think the reason it's volatile is simply it's an emerging asset class. It's not adopted by everybody. It won't be a broad-based adopted currency or digital asset by any one government at any time. So I think you continue to see volatility just based on it's an emerging asset class and it's not used by everybody. Now, you bring up that hopefully answers one of your questions. I do think I'll mention where I think volatility is going in a moment, but you asked about a question about ETFs. So I'm sure a lot of people on the call are familiar as you work with your wealth advisor at Capstone that an investment vehicle out there is called an exchange traded fund. It's a pooled investment vehicle that you can own. And within the world of exchange traded funds, they can own different types of assets. They can own stocks, they can own bonds, they can own multiple things. But just recently, back on January 11th, the Securities and Exchange Commission approved Bitcoin to be actually held in an exchange traded fund. Bitwise Asset Management, who I represent, was one of the 11 firms that was able to launch and create a Bitcoin ETF just about 3 months ago. What's really interesting and why we've seen a fairly significant rise in the price of Bitcoin over the last several months is because there has been a tremendous amount of money that has flowed into these new 11 Bitcoin exchange traded funds. Prior to launch, we knew that there was a good chance that the SEC, the Securities Exchange Commission, was going to approve these. And even on launch day of January 11th, our prediction, Bitwise's prediction, is that we might see in the first 12 months of existence, maybe around $5 billion in net inflows into these 11 ETFs. Since January 11th of this year, the net number, so when you take in money that's gone in and maybe money that's come out, the net number is actually north of 20 billion today. So in just 3 months, $20 billion has come into these ETFs. Now, let me try and give you all a simple example of why Bitcoin's price has gone up. Remember, I told you supply demand, basic simple economic equation works really well for Bitcoin because there's a limited and a finite supply of Bitcoin. As of right now today, on average, about 900 new Bitcoin come to fruition on a daily basis, meaning 900 Bitcoin are mined on a daily basis. Just these new 11 exchange traded funds since January 11th are buying, because they have to buy Bitcoin when money comes into the exchange traded funds, all of us have to actually go buy Bitcoin and hold that and custody that Bitcoin in the in the exchange traded fund. The ETFs are buying up 5 to 10 times that new daily supply. So if on average 900 new Bitcoin are coming to fruition every day, the ETFs, just these ETFs alone, this isn't factoring in anybody else who could buy Bitcoin, is buying up 5,000 to 9,000 Bitcoin on a daily basis. So when you think about what that's doing, is that's eating into the active supply, which is what's been driving the price up so well. So hopefully that gives you a little bit of an explanation to your two questions on what are these ETFs, how are they impacting the Bitcoin market, and why has Bitcoin's price been so volatile?
Yeah, that's really valuable, really interesting. To see 20 billion come in those first 3 months, I mean, that far exceeds expectations, right? So interesting to see the appetite and the demand there, and hence the price movement. I've got loads of other questions I could ask you, Eric, but I think I see a couple in the chat. Let's go ahead,
Okay,
Eric, get folks questions answered, and maybe if there's time, I'll ask you a couple more. But
terrific.
Mauricio,
It's a two-parter on the first one. How can people in third world countries afford 70,000 to buy one Bitcoin? And how is digital currency mined?
those are good questions.
But phenomenal questions. I love these actually. So great question on the first one, because you're right. In the US, we think about, okay, one Bitcoin costs 70,000-ish American dollars. Great thing. This is a great educational piece for you. So interestingly, written into the Bitcoin code when Bitcoin was created back in 2008, Bitcoin is actually divisible up to 8 decimal places. So you don't have to own a full coin to own Bitcoin. So for example, there's multiple ways to buy Bitcoin. You can do it through applications on your smartphone. You can do it through crypto exchanges, multiple ways. But somebody can literally buy $5 worth of Bitcoin. Somebody can buy $100 worth of Bitcoin. Yes, you can technically buy one coin, and it today would cost you roughly 70,000 American dollars. But so to your question, how can folks in third world countries that may be impoverished or don't have a tremendous amount of money or wealth, how can they do this with Bitcoin? You don't have to buy one Bitcoin to move money. You can do it in fractional penny, essentially decimal points, and it goes out to 8 decimal places. You'd have to do 0.00001. That's called a SAT, S-A-T, and it's abbreviated for Satoshi. Remember, I told you the founder was Satoshi Nakamoto. So a SAT is the 0.000001. So anyway, hopefully that helps answer the question, is how can somebody who may be impoverished or not wealthy move money via Bitcoin? Bitcoin's divisible up to 8 decimal places. The second question was, how is Bitcoin mined? So I'm going to try and do this under 2 minutes or less, because I know we're time constrained, but Bitcoin mining is a little bit lengthier conversation. And I think, again, this is another example of, I think, the world of crypto not doing a great job of using terminology that greatly explains what it is. So Bitcoin miners exist in the Bitcoin blockchain world. If you're a miner, and today it's really hard for people like you and I individually to be miners, because what miners are doing, what their role is in making the Bitcoin blockchain ledger consistently work, is they are the ones validating the transactions that are being done on the Bitcoin blockchain ledger. Remember, if I want to move money to Brian, that's a transaction. There's somebody out there validating that if I say I want to move $100 million in Bitcoin to Brian, when that transaction's occurring, there's somebody out there validating that I have the $100 million of Bitcoin that I say I own. And that not only am I sending it to Brian, but the moment I send it to Brian digitally, I can't turn around and try and send that to somebody else as well. And then the miners are also there to validate that Brian receives the 100 million that I sent him. That's an easy way to understand it. Now, what happens is there's thousands, if not tens of thousands, if not hundreds of thousands of transactions that are done on the Bitcoin blockchain ledger every day. What ends up happening, if I'm a miner I go out and validate this transaction. By the way, I said you and I, it's really hard for individuals to be miners anymore because it takes a tremendous amount of computing power because you're actually solving this algorithmic equation to validate this transaction for authenticity. I know this sounds crazy, and this is why I said this could be another hour-long conversation, but a miner validates a transaction. Once they have about 2,000 transactions they validated, they put that into what's called a block. They add that block to the ledger. And so when that block is on the ledger, that is on there for good. You can view it. It is never changes. You can go back and see every block, and that's where you get the name blockchain. It's a block of transactions that have been put on the ledger. Every time a miner adds a block to the blockchain, meaning they validated this 2,000-ish transactions for validity and authenticity, and they add a block to the blockchain, they are rewarded with Bitcoin. Today, the Bitcoin blockchain reward is 6.25 Bitcoin. So that's how Bitcoin is mined and come to fruition. It's not that somebody's just out there searching for Bitcoin floating out there in the inner world, in the ether world. It's actually they're working to solve these equations, these algorithmic equations with a tremendous amount of computing power. And then when they solve these equations, they put them into a block. Once they put a block on the blockchain, they're rewarded with 6.25 Bitcoin. That changes in approximately 11 days. We probably don't have time to go into the Bitcoin halving, but every 4 years it's been written into the code that the reward that Bitcoin miners receive gets cut in half. So on April 20th of this year, just in 11 days, it's going to go down to 3.125. So anyway, sorry, tough to be short there, but hopefully that helped.
Yeah, that is tremendous. You're good at putting very complicated explanations into a couple minutes. So let's, just because of time, I think maybe we have time for one more, and we might have to revisit some of the others. I'll ask you one more. I wanted to make sure and ask one more that I think some others might have. Could this go completely to zero? If I put some money in this, could I lose it all and it goes to zero?
Yeah, I mean, I can't sit here and say no. I mean, it's an asset. It involves money. So the answer is yes. It could go to zero. Do I think there's a likelihood that happens? I don't. It is for a couple reasons. One, as I mentioned, is its actual use case stands to be able to move money in a permissionless fashion, in a decentralized fashion. There's a significant use for that outside the US. And I know for US citizens, we consistently have what I call home bias, in that we just kind of tend to worry about things that are happening in our own backyard. Like we tend to worry about, okay, what are interest rates doing in the US? What is inflation doing in the US? What's interesting, or what's the US dollar doing? What's interesting about Bitcoin and a lot of cryptocurrencies is they're global. They aren't a US entity. They're not regulated by the US government or created by the US government. They're global currencies, essentially, or current global digital assets. So there's a big use case, as we mentioned earlier, in a lot of countries. So there's a lot of ownership and demand for people that want to own Bitcoin. And then now, as we talk about with these in the US, with these exchange traded funds coming to fruition, and a lot of people are investing in them as a way to get exposure to Bitcoin in their portfolio, there's just been a bigger amount of demand for Bitcoin. There's more wide scale adoption now because of the ability to buy it and own it in an exchange traded fund. I think the likelihood of going to zero is very difficult. Do I think it continues to potentially be volatile? I do. And again, mainly because it's an emerging asset class. It's not adopted. It doesn't have the level of adoption like stocks and bonds do in the United States. But what I do suspect, I don't have a crystal ball, because there has been wider adoption because of the exchange traded funds. I do think we're going to start to see the volatility come down. Now, I can't tell you what that means or what that's going to look like, but I do think with more people owning it, it does start to make the volatility become a little bit more muted. Anyway, I hope that helps. I don't think it's going to zero. Could it go down? Absolutely. It's just becoming more and more widely used as not only a way to move money, but a really more of a store of value. And one thing I'll just quickly mention of why people are using it as a store of value. is remember that Bitcoin can't just be printed. It can't just be created out of thin air. One of the reasons that was created in the Bitcoin code is Satoshi Nakamoto, the creator, didn't want Bitcoin to have the inflationary component that a fiat currency like the dollar or the euro or the yuan or the yen can have, where if you think about the United States central bank, they can print money whenever they want. And that causes inflationary aspects to the US dollar. And that's one of the things that Bitcoin wanted to avoid. So we see a lot of people using it as a way just to store value and not have that inflationary component like a fiat currency would.
Thank you, Eric. We appreciate your time. Really, really valuable information. I know we didn't get to all the questions, so please reach out to your advisors if you'd like to discuss more. We'd be happy to do so. Thank you all for your time. Eric, thanks for joining.
Thank you for having me. I hope this was somewhat helpful. I know it was a lot to cover in a short amount of time, but I sure enjoyed being here. Thanks for having me.
Thank you, everyone.